Good morning. Folks, thank you for coming. Very heartfelt thank you. I appreciate each and every one of you for coming here today. Today is January 13th, 2022. If you could give me a little shout out here in the chat room, make sure you can hear me okay. I want to make sure everything is looking good. Good morning, everybody. I'm just checking the chat room. Appreciate the time, my time, and I appreciate you folks. You're busy. You're taking some time out there in the world, whatever you're doing. So thank you for taking some time to come here and spend some time with us. We have a really great treat today. Let's jump right into this. We're doing this is part of the long form interview series. I have Koroush AK today. He's a really a fountain of wonderful information. Here's his Twitter page. Here's his YouTube page. He also has a book he recently put out. We're going to kind of go over that with the man himself. You can find me. I am on Twitter. I'm at Big Cheds. I want to remind you some free stuff. If you go to my YouTube channel, you know, you're just getting started. You don't know what to make of all this. And, especially if you're new to trading, go to tutorials, educational live streams, check out that playlist. That will get you started. That will answer a lot of the questions that you have. By the way, what's the song name? The song name is Church of Eight Wheels. So check out the tutorials. I am, of course, the author of Trading Wisdom, 50 lessons every trader should know. I'm doing the whole book for free. Check out the playlist. I've got 10 of the 50 so far. So check that out. And this is part of the long form interview series. I have 2 so far, one with Crypto Burb, one with Big Chonas, and now with Koroush AK, the man himself. The book is on Amazon, Kindle, audio, hardcover, and paperback. And of course, check out Bitcoin Live, where I'm a founding analyst, the best in class educational platform for crypto. I'm going to bring on Koroush in about 5 minutes. What I'm going to do real quick, I'm going to read to you from the book, give you about 2-3 minutes of Bitcoin, then we're going to roll right into the interview. Let's see. I'm just checking the chat room. Everybody seems like they're doing well. Great to see you here. I love dancing. You know, we like to express ourselves. Dancing's fun. Lesson 25, fight the FOMO. And this is something we can kind of think about right now with Bitcoin right where it is. So it's easy to feel left out in this kind of climate, seeing everyone on Twitter going nuts over plays you are not in. Stay patient. Don't let yourself get caught up in the emotion and stick to your plan. Be patient, be careful, and choose your plays wisely. FOMO stands for fear of missing out and is something that is difficult for even the most veteran of traders to avoid. So, like, what is that? Why is that important? So, we're talking about Bitcoin right now. That's why we're here. And the really patient traders, they bought there on that sub 40K dip. They bought when the price recaptured 40K, or maybe they bought on that kind of confirmation when the price was able to recapture those initial lows right there, the lows from January 7th or 8th, or maybe even in the top of the channel here at 42.5. You had a bunch of opportunities to get into Bitcoin. But like, what do you do now if you're here in the middle and you have FOMO? You do nothing. You always wait for the next proper setup. If you can't get that initial entry where you can really clearly define your risk because you're close to a key horizontal level, then wait. FOMO messes up your entry point, starting the trade out on the wrong foot and often leading you to cut later for a loss. Right? So you want to think about your thinking. Will Trading Wisdom be an Apple? I'm actually in the process of porting it to Apple iBooks, so give that some time. But yeah. So FOMO messes up your entry point. You want to always ask yourself, like, am I FOMOing in here, or am I executing a plan? Am I executing something that I've looked at ahead of time and has a good risk reward? Ask yourself, can I clearly define my risk at this level? How quickly will I know if my trade idea fails? Because when you enter in the middle of the channel, when you're just FOMOing in, it's really hard to define your entry point and define your exit point, which is really the most important. So, in that chapter, I just talk about it. You're having a tough time trading. You're losing a lot of money. And then all of a sudden, you see someone talk about a play and you just jump into it without doing any research. So FOMO will really get you started out in the wrong direction. Let's just jump right in. What do we got? 5-6 minutes in. Let's bring in Koroush. Let's bring in the man himself. Hello.
Hello, everyone. Chad, I love that dance, man. That was such a great intro.
Thank you, man. I gotta say though, those are the moves you taught me. I've been watching your videos. I'm just trying to copy you, brother.
I don't know which videos you've been watching. Definitely not the YouTube ones, but
No,
yeah, we'll have a conversation about that after.
absolutely. I wanna thank you, a heartfelt thank you for coming today. You're very popular on Twitter. I read the comments. People love what you do. You put up really nice stuff. So let's get this started. People who've never heard of you, why don't you maybe briefly introduce yourself and talk about a little bit of what you do? And then if you don't mind later, prepare to share your screen so we can kind of look at that too when we do some TA later.
Yeah, I got the Bitcoin chart up right there, ready to share and talk about. Thank you for having me on. Nice to meet everyone in the chat right now. I will be reading the comments, and right now I can already see people are familiar with the channel. They know about Kim, editor-in-chief of Market Meditations. So who am I? What do I do? I've been in the crypto space about 5 years, and I started off just sharing trades because it's a lonely profession and it was fun to share online. I noticed at the end of 2017, most of the big popular accounts that I thought were oracles that knew everything going on in the market just disappeared. And I thought, hey, my trading's still going okay. I'll share a little bit. And I just live grew an account from, I think it was 30K to 50K, which is, not bad for a 2-month period. And people liked it. They followed me, and I've been going since. About a year ago, I started taking everything hyper seriously and got extremely involved into the space on the building side, working with lots of different projects, launching my newsletter and podcast. And right now, my primary focus is going to be the newsletter. I really want to build something that's going to be a gateway that can bring thousands, maybe someday millions of people into the crypto space, help educate them, and navigate through all the great and terrible things we have.
Why don't you tell us a little bit about that newsletter? What is it like? What's the format of it? How can people get access to it?
Oh, thank you. I'd love to. So the newsletter is called Market Meditations. That's just Market Meditations. You can find it on Twitter and Substack. How it works is we release 6 free newsletters every single week. And what this is it exists to be your one-stop shop for all things crypto. So I used to just be a trader. That means I'd step on, look at the charts, and use technical levels to make trades. This was very effective for a while, but I noticed myself reaching a cap. And I know there's plenty of people that don't, but personally, I found that I couldn't get above a certain level of proficiency, and I've seen people around me doing much better. I spoke to a few people, which I advise everyone do. Never get arrogant in where you are. I got a little arrogant because I was from a mathematics background, and I thought, there's too many data points, nothing you can use besides the technicals that'll really work. But a lot of the people that were doing really well were following the news events, following what was going on in the space, and really keeping a pulse for overall market sentiment and specific news events. And I put together a research team. I'm like, okay, guys, listen, I'm going to hire you, and your job is to keep me up to date on absolutely everything going on in the space, because I personally don't have time. And they did, and it really skyrocketed my win rate. I was doing much better in the markets, and I was finding new opportunities that had absolutely nothing to do with trading at a much faster level, yield farming, NFTs, and all sorts of different projects and narratives in the space. And I thought, hey, I could definitely turn this into a product. I mean, I'm getting the information anyway. Why don't I just turn it into a newsletter? So I spoke, and that eventually became a newsletter, and it's evolved a lot since. But 6 times a week for free, you will have access to everything going on in the markets. And I think it'll really help whether you're a trader, investor, or just someone who wants to keep up to date with this world-changing technology.
That sounds pretty amazing, man. That type of work ethic, I feel lazy listening to you talking like that, like 6 times a week. Wow. I better step up my game. And that sounds really comprehensive as well. And it's interesting. You cover all those things, NFTs, DeFi, and stuff like that. It's the kind of market where you can choose your own adventure a little bit. It's a big ecosystem, and you can be a TA guy, you can be an FA guy, you can do that yield farming and the NFTs. Like, how do you decide? How do you decide what to do, especially if you're new? I mean, do you want to kind of explore that a little bit?
Yeah, I'd love to. Great question. Really, really great first question. Crypto space is one where there's too much opportunity, and it's rare. I've been in a few different sectors before coming to crypto, and having so much opportunity at your disposal every single second makes it really difficult to know what to do, because I mean, to take example back to when I was trading, there was at one point where I developed a really strong system that over a 3-month period had a 90+% hit rate. And this is amazing. Like for any system I've had, I knew this is a bit of an isolated period. I think I've got a really good read on the trend and this system's just working really well. So I wasn't even sleeping, you know, like I had alarms that would go off 7 times a night where I'd just get up, go take that trade. And it gave me insomnia for 2 years. So it was a terrible, terrible decision.
Right.
But the point I'm trying to make is just because the opportunity exists, doesn't mean you don't need to take a step back and holistically analyze what taking that opportunity is going to do for everything else you have. So to bring it to crypto, say you're really passionate about NFTs and you think you're good at reading hot trends, what people are going to be interested in, what's going to be cool or not, really good at assessing the strength of a community, then you might say, oh, this is an area I could really specialize in. It's similar to trading limited edition clothes like Yeezys and stuff. If you've got the skill set to detect those, you probably can do well in NFTs. And you start doing really well, you make a bit of money, and then you notice, oh, DeFi, that looks like fun. This guy's making 10,000% APY. And then you dive into DeFi. But see, that works initially, especially when the opportunity is new. But if you look at a period of time longer than 1 to 2 years, what ends up happening is because your attention is dispersed, you will eventually lose market share to someone whose attention is hyper-focused. You're not going to be able to compete with the person who's all in on NFTs, and your margins are going to decrease. Your edge is going to slowly disperse. So you really need to assess, hey, if I stop doing NFTs right now and I go to DeFi, am I really doing everything I possibly can to benefit from this opportunity right now? And have I reached the point of diminishing returns? What's the point of diminishing returns? Well, that basically means you've reached the point where you're putting so much into this that every extra 1 unit of energy you put in doesn't really give you that much more results. Once you comfortably and honestly get to that point, that's the only time to start moving to a new opportunity. And one more point I'd add, separate tangent, is when assessing an opportunity, you really need to look at both yourself and the market. So firstly, how big is the market? Is it trending? And do I have, is this an abundance of opportunity? So if I grab X market share relative to X market share somewhere else, is it going to be big? For example, NFTs right now are a lot hotter than DeFi. So there's a bit more market share to be captured over there. Less true now, but if we were to go back 2 months, it would be very, very true. So assess the size of the market and then look at your personal skill set as well. And you can determine the probability of success and the size of the success, and then figure out the, say, expected value of that opportunity from that. Expected value being the probability of success times the opportunity, the size of the opportunity.
I think that's a very interesting way to look at it. It's also very analytical too. I mean, is that like an instinctual approach? That almost sounds like a math formula that you're laying out and a proof. You know, like if you're new, you know, where do you go? Where do you go to start? You know, because like I've been in this space for a while and I've never even messed with NFTs. But if I were, I know that would take me some time to even research the mechanics of it and all that stuff. So, you know, like if you're brand new, we got a lot of people who are brand new. You know, should they start trading, or maybe you think it's more value in just holding and yield farming and stuff like that? Like, what are your thoughts on that?
These questions are fantastic. Yeah. So the best place to start, it can be overwhelming to see so much. And I know I gave my analytical answer, but maybe it's difficult for someone to even come close to assessing the size of the market or the potential opportunity. Right. I mean, the best place everyone should start is, I think, before trading DeFi, NFTs, or any of this, you need to know how to set up some sort of basic investment portfolio. And what does this mean? This means basically any income you make, any money you make, you can funnel it into a machine that's going to somewhat guarantee growth. This means very diversified, reasonably low risk, and without any assumption of knowledge or skill over the market, because that's when people start. So what are examples of this? A portfolio of, say, like index stocks, Bitcoin, maybe Ethereum as well, and some other stuff, depending on your personal risk tolerance. Now, I'm not going to give financial advice here, but if you want to learn more about that, there's a fantastic book I'd recommend. It's called A Random Walk Down Wall Street. Really good book. It will teach you the basics of portfolio management, and that's a good starting point for people. So start there, and then start diving into anything that interests you. Like, sorry for shilling the product, but check out the Market Meditations newsletter. Every day we share multiple hot things happening in the space. You don't need to read every single one. Anything that catches your interest, dive into that rabbit hole, down that rabbit hole, and let your curiosity run wild. Really cultivate your curiosity, because I mean, if you're not curious about it, what ends up happening is you need to expend a certain amount of willpower every time you go and learn about something. And if you don't have any natural curiosity, then the cost of willpower is going to be absolutely huge. And that's what makes people's lives miserable. So you need to find the stuff which you're naturally curious about, dive down that rabbit hole, and start learning more and more about it. So I guess that would be my advice with regards to that.
It's really interesting. You know, the concept of natural curiosity. And I feel like a lot of people in this space maybe don't have it. They want to know. A lot of people are looking for like a messiah, you know, like who can, you know, plan B, right? Someone who can predict months out. Like people want to turn their brains off and just hit a button. They want to know like what the answer is. And so there's a clear delineation between those folks who do have the natural curiosity, who do learn, who kind of self-empower themselves. And then there's a whole group of folks who just want to follow a call. They just want to know what the answer is. And I think it's great you're encouraging people to be naturally curious.
Well, I apply this. Sorry for interrupting.
Go ahead.
I apply this strategy to social media in general, where like we have to compete with people who are trying to sell you that get rich quick scheme, that easy messiah answer of, hey, these X altcoins are going to go 1000X this month, so buy them. So what I try to do to counter that is I will use that content for thumbnails to get people to click. And then as soon as they come in, hey, I know you're here for 1 million X altcoins, but I don't think those exist, and no one knows for sure. What I will do is share some strategies which may help you spot them or learn more about them. So I just thought it was a very interesting point. Everyone wants that easy way, that easy answer, that one-click fix. No one wants to go to the gym, diet, and work out. They want that secret new Amazonian passion fruit that makes them lose 10 pounds in 1 week.
Great point. I think someone just asked the name of your newsletter again, Market Meditations. So that's correct?
Yes, that is correct.
And we got to play the game. You're right. You know, we have to play the game a little bit to get people's attention. And, I think that's okay. It's the question of what we do when we have their attention. I think we have to be good shepherds, so they can kind of stick around and spread the word. And so I enjoy doing that. And I got to say, so far, I'm really impressed with what I'm hearing from you. You mentioned that book, The Random Walk Down Wall Street?
Yes, A Random Walk Down Wall Street.
So, I mean, you do a lot of TA, right? Classical charting, stuff like that. Is that your approach, technical analysis? Are you more?
Yeah, for 4 years, almost entirely, I did only technical analysis and built my systems automatically from that. And then it's evolved a lot over the past 1.5 years.
How did you start with the TA? Were there any textbooks you read? Was there any kind of influences? Do you want to talk a little bit about your TA journey?
Yeah, well, it was actually just scouring the internet and finding any bits and pieces of information I could. How I generally learn is I like to see the end result and then dissect the end result and learn backwards from that.
Okay.
A lot of people learn very differently than I do. They like to start maybe from the beginning, take some big books like there's the great technical analysis book, but I think it's called by John Murphy. That's a good starting point for anyone who wants to start from the ground up. And I mean, I've released one myself, which breaks down the techniques and strategies I've used over the last 5 years recently. You can find that on my Twitter page, just pinned to the top. So how I learned is I actually like to watch analysts online and then see what stuff they do consistently and repeatedly. And when that consistently worked, I would dissect it and try turn that into a system. So for example, if I find a social media account, I would follow them very, very closely. And I'd noticed the repeat patterns between their successful calls. And then I'd break that apart and say, oh, So this guy actually, every time RSI goes above X point and a resistance breaks, I noticed he was making the exact same call. Now he did a lot of other stuff, but it was that one repeated thing I picked out, and I'm like, oh, let me try use that and see if it works. And just doing that again and again was the most successful thing for me learning TA. And then once I had a couple building blocks, it completely reversed. It all went like, okay, I don't need any more outside information. Now I'm going to completely build from the ground up using my statistical background. So I did statistics for 4 years at university, and bringing that to trading allowed me to so my system development process, people who follow me on the channel know, is so what I would do is I would lock myself in a room for about 4 weeks and about 8 hours a day, manually backtest nonstop a system on as many different timeframes and charts as I could, manually record every single result, and see if it would end up being a good system or something I'm going to throw away and trash. And oftentimes new ideas would come through that process. But I would go through this once every 4 to 6 months, where either I had a great idea or some of my previous systems have stopped working, because that's another thing I've found with trading is market conditions change a lot, and specific markets have nuances to them, and the nuance is where you make a lot of the money and you find your edges. And any good trading system needs to continually be adapted and evolved to an ever-changing market.
It's a great point. I think we have to always adapt. You know, something's working until it doesn't. So I think that you speak to several important things there. You speak to taking an idea, testing it, learning from it. I think that's really important. And then not getting married too much to an idea. You know, flexibility is incredibly important. You know, I think the phrase is strong opinions weakly held. You know, if you get more information, you're willing to change your opinion. Let's talk a little bit about what's going on with crypto right now. I'd love for maybe you to bring up a chart. I'd like you to maybe, if you don't mind, generally describe, you know, the last couple months of price action, and then maybe talk about a philosophy or a general approach in terms of where we are right now with what's going on. Let's get that set up, folks.
I would love to.
Let's see. I'm just checking in the chat room. People are really happy. Everyone's really happy that you're here. Let's see. Great questions, Cheds. Great answers by Koroush. Let's see. Says that this is awesome, Koroush. Great compliments. So far, newsletter is Market Meditations. While he gets that ready. That's the book he mentioned, A Random Walk Down Wall Street. The other one was that TA book by John Murphy. I don't have the name off the top of my head. He also mentioned that. And great show. Here we go. We're going to add that to the stream. I see your screen, brother.
Perfect. Okay, so let me give my general Bitcoin update. We'll start there. Always a good place to start with the markets. Okay. Now, this is where my analysis currently lies. So let's start with, like, let me get, sorry, just sorting my screen out 1 second. Of course.
No rush, no rush. We have all the time.
Perfect. Okay, so great place to start with the markets is always just taking a look at, I mean, we're on the daily, the trend, and there's multiple ways to determine the trend. One of the easiest ways where you can instantly visualize it is taking a look at moving averages. Now we've got 3 here. I'm pretty sure this is the 100, the 30-day, and we've got the 7 over here. And you just look at these moving averages and you get a clear idea of the trend of the market. Obvious uptrend over here. I don't think you need moving averages to know that this is a very strong.
Is that a simple 7 or exponential?
That is the simple 7 over there.
Okay.
And yeah, so we're taking a look at these 3 moving averages, and it's going up, coming down. So this is the uptrend over here. Here we see the inflection point. Now, alongside the uptrend, you can also take key structural levels. So we have like a high there, low there, high, low. Then it starts to lagging a little bit, so people will have to bear with me. I've got too much security software on this. So we hit a high over there, and then it breaks this first key level over here, and then it's really bad when it breaks this one over here, because you can see the market is no longer making new highs and holding higher lows. That's when it switches. Now at this point, we start entering a short downtrend into a sideways trend over here,
Yep.
into hope of an uptrend, and then
Yeah.
back down, which makes this entire period more just like a weak sideways trend with a short period of up and now a short period of down. So that kind of rounds up the recent price action. We haven't really been in a strong uptrend since we broke this level over here, and strong is relative to, say, crypto. Now what I'm looking at is how do we trade the current conditions and where are we right now? I like to use Bitcoin as a metric for the entire market. And you can see I've marked out key levels and zones over here.
Okay.
You can get rid of some moving averages now. We no longer need these. Okay, so what do each of these levels and zones mean? Well, we've got around the 50K level, a key resistance right now. Now, this is an important resistance because 50K is psychologically really important. And we can see just structurally this medium short-term downtrend since November. We've got our recent lower high over here. So this lower high over here is also confluent. So really, really important level over here. If we get above this, we can start shifting a little bit bullish again, and we can make some bullish arguments.
A little bit bullish or a lot bullish? I feel like that'd be pretty darn bullish if we were to clear that, you know?
So I'd love to say pretty darn bullish, but it also depends on time frame. Like if we're looking at short to medium term time frame, pretty darn bullish. But if we're looking at more of a macro level, I mean, we've gone above it twice now. We've gone above it twice, and I absolutely hate seeing this sort of move where the price gets above, comes back down, goes above again, and we think it's going to go to Valhalla, and then it absolutely crashes back down. This just looks like a potential final exit pump, which is not what I think it is. But what I'm saying is that's why this isn't my omega bullish level where we start calling 100K again. Then we've got the neutral bullish zone just below this. Neutral bullish is kind of like a high risk area where you're like, okay, I feel bullish because of non-technical reasons. Now, on top of the technical reasons, I might go for a higher, a strong risky play over here. And I'll explain what each of these mean in a little more detail at the end after going through them. We've got the 40K level over here, psychologically really important, and a key structural level of this previous medium-term uptrend we had from about July to there. And then the levels continue going down afterwards. Once we lose 40K, if we lose 40K, I expect the next bounce to be 36K. That's where I expect like a great buy opportunity. So now, how can we tangibly use these bullish, neutral, bearish, and bearish levels? I think this is quite beneficial to anyone who's trading. So bullish means favor longs over shorts. Neutral bullish means you can almost favor longs over shorts. The neutrals mean play the ranges. Neutral bearish mean favor shorts over longs. And then bearish obviously means really favor shorts over longs. So that's how I like to use these areas. They give a slight edge, and you can also use them for the macro market as well. So when Bitcoin is in a neutral zone, you can expect certain behaviors from altcoins. Now, they are decoupling quite a bit. Like it's nowhere near, and Chads, you've been here longer than I have. It's nowhere near, the market is nowhere near as tied to Bitcoin as it was 1, 2, especially not 3 years ago. But it still applies without a doubt. Bitcoin is king. So in the neutral zone, you can expect more isolated pumps in specific sectors of altcoins. They tend not to all go up together aggressively and all go down together aggressively.
Relative strength.
Zone, yes, precisely. In the bearish zone, you can expect most altcoin pumps to instantly retrace back down and just pretty much be exit liquidity. And in the bullish zone, we partying, Chads. Everyone's making
brother.
Printing. It's good. So yeah, that would be my update. Hopefully it's helpful to listeners.
So it's been a big move, right? A big 2021. A lot of the gains, well, it's 2022 now, but you know, those gains came early in the year. And as you've kind of expressed really well here, we just been consolidating that big move really for like the second 2/3 of 2021. You know, give me your, you know, I always like to say a true chart. I'm going to put you to the test here, brother. A true chart technician can illustrate both, or can articulate both the bullish and the bearish thesis. So maybe why don't you give me a bearish thesis on a higher time frame and then a bullish thesis on a higher time frame as well.
Let's go. So bullish thesis right now. First thing we want to see is break of this level, but realistically, let's go hardcore, stronger opinions. 50K. when I see 50K break here, I suspect we go up and potentially test, wouldn't go to 60K, but I'd say this level here. Come back down and then continue up afterwards. And then we've got a couple levels of individual resistance to get through after. But I think once we get above 50K, we can pretty confidently say that most of those levels are likely to break. And then that leads us to another strong uptrend. But what I've been doing recently is I wouldn't look at it isolated in just the technicals. What I want to see is when we get above this 50K level and start breaking levels one after another, is there a strong narrative to drive the market? And narratives is something I've been looking at a lot recently, because when there is a really strong narrative, everything seems to go well alongside that. And that's what a lot of my trading has been focused on. I favor charts, just like we can use the market structure, bullish, neutral, to help skew our bets. For example, we take more longs over here, we take more shorts over there. I use narratives in the news now to skew my bets as well. If I know the metaverse and play to earn gaming is hyped as hell, I'm going to favor longs on those plays a lot during those periods. So what I want to look for when we get here is what is the narrative that's going to drive this to the next level. And I'd like to see something as big and exciting as DeFi or NFTs, which really have been huge movements, or even a new strong layer one narrative. For those who don't know what any of those are, feel free to look up. NFTs, I think most people know. DeFi, layer ones, a little more complicated. Basically, when DeFi and NFTs came out, the market had a huge demand for DeFi and NFTs. They were like, I want to use this now, but Ethereum's too darn expensive. It's like $500 a transaction and people can't afford to pay that. So the narrative was, wait a second, people aren't going to wait for Ethereum to upgrade. They're going to look for other solutions now. And that's why we went hard on Solana. I had a really, really strong Solana thesis based on this. And we traded that aggressively, favoring longs over shorts, and it did really well. So what am I going to look for in the bullish case over here? Now, the case no one wants to hear, or the bear case, really doesn't look good. But my bear case is below 36K. I think if we drop below 36K, that's the final level I'm really looking at. I see us coming, like, it's crypto down to about 20K is possible. Once we lose this 36K level, it's not even a 50% drop to get to 20K, and it's not unheard of in crypto. Now, we've had a lot of guests on our podcast that share this alternate thesis, which is that this time is different. Why is this time different? Because crypto has more real value, whatever that means. People are actually using these protocols and systems. So judging on past data, I think 20K is absolutely possible in the bear case. But going on what a lot of experts are saying in the space, though they have their own reasons to not promote bearish narratives, is that because DeFi and NFTs have real world use cases, crypto is too established right now to see those sorts of crazy drops. And the
That's just talk, right?
A lot.
That's just talk. I want to ask you a question, though, and a technical question. It seems to me you're favoring that 36K over 30, and I would look at 36K as kind of a mid channel in the 80K rectangle, in the 80-day rectangle. I feel like there's more data. There's more data points at 30K, right? 30K is where we had the spring or the false bear break. So when you say like we break 30K, we're looking at 20, I'm wondering why you seem to be favoring that 36K or that mid channel area more than the bottom of the channel or 30K.
So the reason I'm looking at the mid channel is because if we break this area here, I'm going to be extremely cautious and already looking for narratives. So the way I'm trading right now is if I see a strong narrative here versus if I see a strong narrative here, it's both looking pretty terrible for the market. So technicals alone, I would say at the 30K level, that's what you need to be looking for. But if I'm in the net neutral bearish zone and I've got non-technical reasons skewing me towards favoring a short, then that's why I'm looking at that 36K level more, because as soon as that 36K level breaks, I am switched on and waiting for my trigger or my strong conviction to either take a short or more likely just take risk off of the market, because generally I don't take that many shorts these days anymore, especially since I've transitioned away from intraday trading more towards positional swing trading.
So what? And thanks for answering that. I think you're kind of speaking to momentum. There'd be some serious momentum if we drop,
Mhm.
drop 36K. We'd be approaching 30K with bear momentum. So I pretty much, generally agree with that. I think that's a really measured way to look at it. I'm curious your thoughts on the concept of, like the ETH BTC pair and the idea of Bitcoin tops in some ways can be viewed ahead of time by looking at the rest of the market. Like Ethereum started to run and then it was Litecoin. Really, Litecoin marked the top like November or whatever, 9th or 10th this cycle. And I continue to watch, the ETH BTC pair. So because when the Ethereum's outperforming Bitcoin, Bitcoin's not going to be making new highs. So do you kind of have a similar approach where you're kind of looking at Ethereum as a strong data point to give you a sense on Bitcoin, or is that not factored into how you approach the market?
So that's definitely factored, and if it's okay, I'm going to use some visual aids there. So what I feel used to happen quite a bit is we have BTC at the top determining the market, and then I think most people at this point have seen the money flow chart where it goes from BTC to Ethereum to large caps, mid caps, small caps.
Yeah.
But what's happened over time is the market's matured, and there are a lot more categories now. So sometimes BTC goes to ETH, and then afterwards it continues down to other large caps, and then it will go to medium caps, and then it goes to small caps. But that used to be really simple. You just look at the market cap and that's what it is. But these days, people have so many more options as to where they can flood their money.
Yeah.
So medium caps might not be all the medium caps. It might just be the medium caps that fit within the narrative and story of layer ones, or just DeFi, or just NFTs. And then instead of flowing from large caps to medium caps, it goes from DeFi to just lending protocols to really, really early stage lending protocols. Or what happened recently is the market literally went from BTC to ETH to NFTs to play to earn gaming to really, really new recent play to earn gaming opportunities. So it used to be very, very easy to predict, but I feel as the market matures, you just need that extra, we were speaking about the nuance. You need to understand those like nuanced details to really navigate it effectively. Again, if you aren't a pure technical trader, which really does have its place, but as you can see, I don't do pure technical trading as much anymore. The technicals are just a component, a very, very strong component that I love of a wider system.
I'll be completely honest with you. I'm impressed with your knowledge of what's outside of the technicals. I've really just buried my nose so much in the book. And I often say everything outside the chart is noise. And if what you're telling me is important, I'll see it in the chart. And there's a little bit of me that really does want to learn some of this stuff. But like, I literally don't even know what a level 1 is or level 2. Like, I just like, but I really want to be good at what I do. And that's what I try to do. So I enjoy these conversations. And I enjoy the fact that there are other excellent teachers and communicators like yourself out there kind of opening up the door for people to learn about those things. I think that's pretty awesome. I'm going to quickly check a couple of questions I had for you ahead of time, see if there's anything that I want to pop up. So, let's wrap up soon, but let's talk about a couple alts maybe. You mentioned Sol earlier. What are your thoughts maybe on the Sol chart? Do you want to kind of just give us that and see what we got there?
I'm going to just quickly stop sharing so I don't lag on this transition.
Okay.
Let's get this up.
Are you a practitioner of Brazilian Jiu-Jitsu?
Yes, I am.
Oh, that's awesome. Very cool.
Huge fan. Cool. Recently started.
Good for you, man.
Recommend it to anyone. Such a good physical and mental exercise.
I started working out recently as well, and it's hard to have a healthy mind without a healthy body. And
that's a whole nother hour podcast right there.
Oh, brother, I'm telling you.
Is my screen sharing right now?
Not yet. Oh, it's my fault. Now we're ready.
Okay, perfect. So we've got a couple levels marked out, but let's start with a fresh chart for this one.
Okay.
So What's happened with Solana? Well, we've seen one of the craziest uptrends I've ever seen. In December 2020, it went from 0.45 to a high of 260. Where I started to get interested was around this $10 level over here. That's where we formed our thesis that hey, this actually looks pretty good. This might start going. I think it was just above the $10 level before this high break over here around the April point, and then we got very, very high conviction bets higher up as well. So why were we bullish on Solana? I explained the narrative behind it, that layer ones were going to be strong, also coupled with a strong belief in the FTX team as well. I mean, they've got so much capital backing them that it's almost too big to fail. As long as the entire market doesn't fail as well. And now going into next year, we're at this point where you can see Bitcoin's neutral. That means looking at the market, we don't have that high conviction, everything's going to succeed. So even if we lose, it's fine bet. So right now we need to be a little bit more careful and structurally, and I'm sure Cheds, you see this from a million miles away, we're at a pretty key level over here at around 130. And we really don't want to lose this. Otherwise, structurally, it looks pretty terrible because we formed this higher low over here. And this was the last higher low of the uptrend. And just like Bitcoin, after that, we had one final wave up. And then this is crashed down in a pretty steady channel. Like this is without a doubt steady downtrend. Like there's no other way to look at it. And this downtrend has led right into this 130 level here. So what I really don't want to see here is up, test the resistance, and then back down, because that's going to be pretty hideous and a probable break. So going into this year, I don't think it's wise to take, well, personally, just for me, people please just use this as educational content. I don't think it's wise to take any sort of position until we get at least above this 170 level over here. Why this 170 level? Well, I mean, ideally, we can even get above 200, but that's quite far away. If we were to look at the previous things I had, this would be the neutral bearish zone, the neutral bullish zone over here, where it's higher risk and you want to look for confluence outside of the charts. So this is where we've got neutral bullish. And then above this 200 level, then I'm going to be very confidently bullish again, key psychological level breaking. And this is where it's a bit different to Bitcoin. You'll notice I had a bit of hesitation with Bitcoin when it came to that 50K level. But the reason I see Solana a little bit differently is it's a lower market cap coin. At the point where this is neutral bullish or bullish, we're likely going to see confluence with the rest of the market. And as a higher beta asset, it's likely going to fly past these previous resistances.
Higher beta, essentially relative strength. It's a higher performer, right? And will thus continue to likely perform better going forward.
Precisely. It's going to be easier for Solana to break through multiple levels of resistance relative to Bitcoin. So that's why I would have my bullish level for Solana above the 200 being both key psychological level resistance and structural level is here on this downtrend. You can see that's the top of the channel test over there, which we want to see break. So that would be my play with Solana. Maybe take it a little easy over here. Cry if it goes below 130, and you got your neutral bullish and bullish levels.
Why don't you pull up a 200 MA for me, if you don't mind, on this chart?
Yeah, sure. No. Oh. Forgive the lag. This is why I
we're really happy to have you here. It's kind of you to spend your time, so thank you.
Perfect hit right there.
So yeah, I'm watching that too. You know, you've got that concept where you have a strong trend that has that much time in between MA200, touches. And usually you're going to get that first bounce off of it. So I really agree with your analysis. I also think that MA200, like that's a long thesis, that entry there. So, and you can pretty easily define your risk as well. Obviously, if you drop below it, you could get out. So, I mean, do you do that type of moving average trading as well? Or are you really just looking at the zones combined with kind of narratives as you put it?
So I have boiled it down to right now, I use the 100 and the 30 primarily. Okay. And I also like the 7, either moving average or sometimes exponential average, because I actually use that as a tool to get confirmation on level breaks. The smaller moving averages, and then the 100 tends to be enough for me to determine the strength of trades for positional and swing trading. And I haven't really done too much testing on the 200 because I haven't really needed to.
Okay, you've been really generous with your time. Do you mind maybe do one more alt and then we'll wrap it up? And I think people are really loving to hear your approach. I think it's refreshing to hear the kind of measured way you're looking at things. So. People had asked for Luna. Maybe do you want to do Luna? Does that, or do you have one in mind that you?
I haven't been looking too much at Luna, but I would like looking at fresh charts.
Cool.
Let's go for, which is a good Luna chart.
Like Binance Luna's fine. USD.
UST. No, maybe not that one.
That's funny. There's so many pairs and so many exchanges. It's like the space is so complicated.
Let's go for Gemini.
Okay.
This one here. Okay, looking at Luna. Are you trading Luna yourself, Chads?
I definitely do. You know what I encourage people to do is pick really the 5, 6, 7 strongest charts and just play those. And Luna has that relative strength. So, you know, like when Bitcoin did the sub 40K dip and recaptured it, I immediately looked at the charts of relative strength and I traded some of those. So Luna's like in that group. So definitely yes.
Taking a quick look at Luna, I actually like what I'm seeing on the chart. So key levels I immediately want to highlight. I'm seeing we had a very strong uptrend. First sign of us going down over here. And we've got this key level around this $80 level, which is breaking. You could take it down to 80, but that feels wrong given the data points of that structural level there. So I take it a bit higher, sync it up with the 100 moving average, and right about where we are now, key test. So I see a potential breakout play right over here with your first resistance being a little while away at 93 over there. And if we draw that, what are we looking at? About 10%. So we've got a potential 10% move over there, looking for the breakout play there. And I mentioned earlier how I like to use my moving average for confluence on confirmed breakouts of levels. So I guess I'll share that with your audience as a nice way to do this final analysis. So take a look at this key level here. Notice, guys, I don't use too many tools. I try to keep my analysis really simple and logical. What we have here is a move up to this level, and we haven't seen any real retracement. If you take the Fibonacci levels, like this is a strong move. Why is it a strong move? Because it hasn't once really retraced past the 0.236 level the entire way up, except this one over here. So this is a really strong move into our key resistance. That's already a good sign. The next thing I want to see for confirmation is if we zoom in here, take a look at the moving average. Don't wait for the chart to get above the moving average level. Sorry, don't wait for the candle to get above this $82 level. Wait for the moving average to get above it, and that's where you have confirmation. If we take a replay over here, it stops you making premature moves in the market. Let's take the $75 level here. So I don't think this is as good a breakout play as the one we currently have, but instead of waiting for that initial break, you can actually wait, take your time, be patient, wait for the price to come up above it. And then if it comes back down, go for a retest play. If you want to play aggressively and you've got a lot of space above the chart. So here, I wouldn't go for that non-retest breakout entry. Why is that? Because, well, above here, there's not that much space. So there's no clear invalidation besides this point here. So we're looking at a 50-50 trade. Yeah. So in this instance, I would only take a retest if it were to happen. So that's an example of the strategy and how you can use it. Hopefully helpful for people. So here again, when you see the moving average come up, great time to either go for a retest play or a breakout play. And that's what I'm looking at on Luna. And then going very macro, it's a powerful uptrend. So if you get that psychological break above $100, that is if you're a patient trader and you don't want to start trading intraday or short-term swing trading, you want to take a strong position, wait for the market to be strong and wait for that breakout above $100. This is a very, very powerful chart in that regard.
That's fantastic. You spoke to a lot of great strategies, being patient, looking for confirmation. And then, confirmation is different for everybody, but that's an excellent way to do it with the moving average. Some people use candle wick, one close, two closes, time interval, percentage move. There's a million ways to do it. But hopefully the underpinning of all that is a patient method. I think so many of these new traders, they're failing because they're not waiting for retests. They're just seeing green, they're jumping into it. And it saved me a lot of money with my trades, man. I just wait. I wait for that deep dip in the uptrend. And because I'm not a good trader, so I need a good entry. I need a really good entry to help me because my habits are so bad, Wow, this has just been unbelievable. I had some expectations. I had high expectations because Gunnar talks about you so well, but you've completely exceeded the expectations I had. So I definitely really appreciate that. I'd love for you to tell us again about how people can find out about you and your newsletter and the stuff you do. Love to hear about that again.
Chad, I've been on a lot of podcasts, and some good, some great. I definitely put you up there as a great interviewer, really thoughtful, great questions, great dancing. Absolutely fantastic episode. I had a great time. Your audience is also amazing. Thank you for the great comments, guys. It's really nice as I'm doing this and I see you guys saying thank you or you enjoy certain things. Awesome audience. Hey guys, if I've provided any value from you, the most important thing I want is not for you to follow me on any certain channel or my newsletter. It's to remember that the crypto market has an abundance of opportunity right now. Be patient. If something sounds too good to be true, it probably is. So take care when with your money. And if we're right about our crypto thesis, all you have to do is be here for the next 5 to 10 years and not go to zero, and you will succeed. So take your time. We're all going to make it.
Oh, I love it. I love it, folks. So I'm gonna wrap things up. I'll show your Twitter page, your YouTube, all that stuff. But I want to wish you many blessings. I hope you have a fantastic day. And I really do appreciate you coming today, buddy.
Thanks a lot. It was a pleasure. Chads, have a great day. Audience, thanks for having me. Bye, everyone.
Okay. Wow. That was pretty stupendous. That was amazing. That is Koroush AK. He's on Twitter at Koroush. I took way too long to start following this guy. I'm definitely going to have to check out his newsletter. Looks like there's the link in his Twitter page, Market Meditations. He's got a book he just put out, an ebook. I mean, this guy is it just seems like a fire hose of free alpha. So you want to check that out. Really great stuff. His YouTube page, of course, Koroush AK. You definitely want to check that out. What an honor. So folks, I am on Twitter. I'm boring. I'm on Twitter. I'm at Big Ched's Academic Observations about Price Trading Psychology. The book, I've mentioned it before. I read from it briefly in the beginning, Trading Wisdom, 50 Lessons Every Trader Should Know. On Amazon, Kindle, audiobook, hardcover, and paperback. The free version is on YouTube. Please do consider hitting like to the videos, hit subscribe. Go to the playlist, Trading Wisdom. I'm doing all 50. I'm doing the whole book for free. A new one every 3 or 4 weeks. So if you're patient, I'll eventually have the whole book for you for free. If you're brand new to trading, you don't really know, left from right, up from down, moving averages, indicators, support and resistance. You need to watch the tutorials, educational live streams. That will really help you get started. And of course, I am a founding analyst at Bitcoin Live. I've been doing this for more than 3 years, twice a week, long form, full market updates. I'm incredibly proud to be a founding analyst and to be part of that team. It's literally an all-star team. And somehow I'm part of it. So I'm really thankful for that. So please do consider checking that out. Bitcoin, we're above 44K. 44K feels good. We've done a lot of analysis in this video. I think, bulls are due for a little bit of a relief rally here, but they've got some work to do to really turn momentum around. So if you're looking for more analysis, watch the videos I put out recently over the last few weeks, and hopefully that will help you. What an honor. What a great time we had today. I want to say thank you for coming today, and hopefully you'll come for my next stream. I'm going to finish it up with a little bit of dancing. But until then, I really hope you folks are doing well. I wish you well, and we'll talk soon. All right. I love you guys. Stay safe. Peace out.